Good morning, good afternoon, good evening, folks. Michael Zuber, One Rental at a Time. This is my first time doing all of this, so we will see how it works. What we're going to do is we've sent an invite to all One Rental at a Time, or more specifically, how to get started One Rental at a Time students. We are decided to focus on step one of the course, which is buy box. We have two students that have graciously enough have been doing the course for a year or so, sent us there, so we will go into detail. But before we do, I want to talk about why the buy box is the anchor for my course. Skipping around in my course without getting your buy box done first is a complete mistake. It is a waste of time. You will go backwards. I don't think you will get the speed, efficiency, or scale you are hoping for. When I think about the buy box, there's a lot of things that I want to think about. Again, the buy box is something that I used for the first 3 years of my journey. You've probably all heard me talk about it, right? I invest in Fresno, California. It's 1 million people. It's too big. I invested in 93703. It's a zip code. It's too big, right? I was traveling all around the world. I didn't have time. So for me, my buy box was 3 and 4 bedroom houses between 12 and 15 or 1,600 square feet. That's all I looked at for, 3 years. So when you're first in the course, buy box is step one. This is the goal. Your buy box needs to be tight enough, restrictive enough, where I want the inventory of availability to be between 20 on the low end and 40 on the high end. If you were me and you picked Fresno, California back in 2002, and that's all you put in, it would have been thousands. Too much. If you would have gone in and said Fresno 93703 between 1,200 and 1,250, it would have been too small. So the goal as you're starting the course is between 20 and 40 active listings. Once you kind of get that is your search. That's a fixture. It is meant to be a consistent review. The buy box for me is not only focus, it is permission to ignore everything else. Part of the challenge of new investors is you're so excited. You're so energetic. It is the financial freedom is on your doorstep. You look at too much and you actually confuse yourself. So again, something that I really want people to understand is the buy box is permission to focus. So let me just make sure you all, okay, there we go. Just in case somebody goes off mute. So again, that is what the buy box is. It's focus and permission. It's also meant to be time efficient. I don't know about all of you, but when I started this back in 2001, 2002, 2003, I didn't have a lot of time. I had minutes. And I could get 20 minutes a day. For me, I didn't have a smartphone, so I actually had to be connected. So hopefully you can find 20 minutes. And I do mean every day. One of my greatest frustrations is when a student comes to me and goes, I can't find the time Monday through Friday, but I'll give you 4 hours on Saturday. I'm like, that's not how you build six-pack abs, right? You don't just work out on Saturday. You've got to do it every day. If you can't, wake up early, skip lunch, something, right? If I could find 20 minutes a day while traveling all over the world and not being able to use a smartphone, because back then we had Blackberries, it takes 20 minutes. It's supposed to be repetitive. I hear a lot of folks get into it. They're like kind of uncomfortable the first 2-3 weeks. Then they kind of get in a groove. And then by like day 40, they're like, I get it now. Well, you get it if you can clearly articulate average. If you clearly answer the questions that you don't know. What are the taxes, insurance, property management, reserves? Right? Part of the spreadsheet that you are building is highlighting what you don't know. Right? That is important, right? I don't know about you, but when I came to this, I had no idea what property management was. I had no idea what insurance was. I didn't even know. I bought one house, the house we lived in. I didn't know what property taxes were. I didn't know there was a rate that you could basically calculate. Right? So it's highlighting what you don't know. For some of us Excel wizards, the spreadsheet is very, very easy. As a teacher, mentor, somebody who's meant to inspire, I have to realize that not all of us are great at Excel. So for some of us, a spreadsheet is something to be nervous about. So when you look at my spreadsheet in the course, it is as simple as I could make it. And that spreadsheet is still the one I use today because I want people to realize it can be simple. I believe the answer of step one of the course is very simple. What is an average deal in my chosen buy box? That is the goal. It takes time. I know lots of people come into this, they're excited. They think they figured it out in a week. Trust me, you haven't figured it out in a week. The fastest that I have seen somebody convince me that they know average in their buy box is 60 days. Could you be faster? Sure. Are you going to be 50% faster? Probably not. I've helped thousands of people do this. I would say the average person, just so in case 60 days is not you, is 90 days. And that once you know average in your buy box, you suddenly have the power. You are in charge. When you talk to an agent about your buy box, you can say things like, hey, I want to write her off. I want to write off her on that house, that duplex, that fourplex, that apartment at this price because I will earn this yield or cash on cash or whatever you want to call it. You are in control. You are no longer giving power to someone else. Lots of new investors go, give me a deal. Oh, that agent has a lot of listings. They must know what they're doing. Which one should I buy? Well, buy that one. Well, why that one? Well, it's blue. Well, I don't care about blue. I mean, that's what we're trying to teach here is average. Also, as you will see, the spreadsheets that we get from Nathan and Roldan, the spreadsheet, your job is not to copy my spreadsheet. If you copy my spreadsheet, you are not getting what I'm trying to teach. The spreadsheet is meant to be your baby. It is your thing. For example, on my spreadsheet, you will never see square footage. Square footage means nothing to me. If I get a 3-bedroom, 1-bath at 800 square feet versus a 3-bedroom, 1-bath at 1,100 square feet, in my market, they rent for nearly the same. In fact, the 1,100 square foot probably costs me more turnover, and I could probably buy the other one cheaper. I don't care about cost per square foot. I just don't. It's just not my thing. Others, it's like their anchor. And I'm not here to judge. I'm only asking one question. What is an average deal? And also, I don't care what that number is. And if you're investing in San Diego, California, and your average deal is 1%, but you have to invest in San Diego because you live there and you don't want to get on a plane and blah, blah, blah. Great. If your average is 1, let's do 3%. If you're investing in the Midwest and average for you is 10, great. Your job's to get 12 or 13. Figure out average, add a couple of points. That's what we're doing. And since we are talking today in 2022, I want to be very, very clear. If you listen to any of my old material, you've heard me talk about good and great. The deals I did the last 2 years were good. The market was crazy. It was hot. It was hard. I believe the market is coming to us. I believe the owner-occupant buyer is being stretched. Affordability is as low as I have ever seen it, which hurts homeowners, first-time homeowners specifically. That means if we lose 50% of those buyers, there are more opportunities for us as investors to write great deals. We are only writing great deals today. You may accept a good deal, but you don't write a good deal and negotiate to average. We write great deals and maybe, if you desire, negotiate to good. And then lastly, what I'm really trying to teach in this is really a weakness of mine in stock trading. I don't know about you, but I am an emotional stock trader. It gets inside my head like a drill and it just drives me crazy. The spreadsheet for me allows me to remove emotion. I said it many times and I mean it. I compare 20-unit apartments with 1-bedroom, 1-bath houses. And I don't believe bigger is better. Bigger is better sometimes. I will buy the highest yield. I'm not ego driven. I don't need to say I own this number of units, but I will talk about, getting great deals in my market for average. So again, that's what I have for kind of the intro. It's why buy box is so important to me. It is what I have built my entire 20 years of investing on, is only doing good or great deals in my market. It helped me understand what I don't know. It helped me grow my network. It is where the power is. So let's see if there are any, let me just see if there's any initial questions with buy box up front. And I'm just trying to figure out Zoom. So let me see if there's any questions on buy box to start, and then we will get Roldan and Nathan in here momentarily. Let's just see. Oh, how do you choose a buy box? That's a great question from Catherine. So that is a question I get a lot. I'm going to twist that, Catherine, because I get a version of that two ways. Let's pretend you're me, you live in Silicon Valley. And as I shared in my story in the beginning, Catherine, the Silicon Valley doesn't work, right? Live where you want, invest where the numbers make sense. And I chose Fresno. I believe in the beginning, you need to choose a market that is close to you, because I want you to go kick rocks. Even in my case, I live now in Mountain View. I might pick, I probably would pick Sunnyvale, which is a market that's about 20 minutes from me, local. I want to understand and learn average in Sunnyvale, California, because I can go to open houses easy. I can network. I can meet agents. I can understand and learn the market. Once I could articulate that Sunnyvale, California's average is -5%, I will take that knowledge and know I can repeat that anywhere in the country at any time. I can't choose Fresno first. I know no one. I have never been there. I didn't know, like, why did I choose 93703? Because I learned I need to pick middle market, mid-market. I would not have known that if I tried to learn. I would have been lost in Fresno. It was 1 million people. So a lot of folks, if you live in an expensive market, which you have no intention of investing in, it is still, in my opinion, best to learn the 90-day skill there, because you can kick rocks, meet people, walk properties, understand what different qualities are, like ABC, which we see in the property. A is turnkey, C is a full remodel. It's easier to do that in your backyard. Then once you have the skill after 90 days, then you have a choice. Where do you have friends and family? Because I believe when you're investing out of state or out of area, you need to have people on the ground that will tell you bad news. Bad news doesn't get better with age. And if the only people on the ground are people you're paying, they're probably not going to tell you that. So I would lean on, where do I have friends and family? Maybe college people, maybe just where do you have personal connections? If that doesn't work, like none of that, like all my friends are in my backyard and I don't know anybody anywhere else, then you know, like, do you want to drive? Because you can get a lot of places, right? You were not going to get me on another airplane. No chance. If I didn't find Fresno 2.5 hours away, I have no idea what we have done, because I wasn't going to get on an airplane. Maybe you want to get on, maybe that's your thing. Maybe you've always wanted to go to Nashville. I'm just picking Nashville out of the air. Great. Well, go figure it out. Go spend a weekend. I think a lot of mistakes are made when you don't visit properties. You're going to potentially put tens, if not hundreds of thousands of dollars in. Go visit the city. Make sure it fits. So those are the things that I think about. I think it would have been a mistake for me to go right to Fresno without learning the skill in the Bay Area first, right? I spent a year learning the Bay Area and learning it didn't work. I should have spent 6 months. But did that help, Catherine? You could just nod your head, yes or no. Yes? Okay. All right, very cool. What else do we get? Greetings, mornings. Thank you, guys. Thank you. Any more basic questions? Awesome. The initial impression is that the average for the city would not give good deals. Should I focus? So Ricardo, I think that's your question, if I'm reading this right. It really, I don't know what you mean by an initial impressions. When I hear those words, I hear it's a feeling. I'm not a big feeling guy. I'm a big data guy. I don't like, hey, I'm going to look in San Diego because I live here. Cool. Oh, my buddy down the street said it's bad, or I've looked around for 7 seconds. It doesn't seem right. I'm not a big feeling guy. I would spend 30, 60, 90 days and, again, answer the basic question. What is an average deal in San Diego? I am trying to teach you a skill. Once you have a skill, you can repeat it anywhere. It is easiest to learn a skill in your backyard. That is my opinion. So again, what I'm hearing in you, what I'm seeing in your I don't know, what is that? A chat, or I don't know what these are. Comments? I don't, whatever. Is it's a feeling you haven't done the work yet. To me, go do the work. Stop it. Do the work, right? It's why it's like my favorite quotes. Why I have a hat that says do the work. So do the work. I think a lot of California investors default to out of state because it's cheap. Well, let me promise you, you can go broke buying cheap. I've seen a lot of people do it. So my answer, again, in opinion, is do the work. If you've done the work for 90 days and you could say, Michael, San Diego is a negative 3% average, well, congratulations. You've done the work. I'm not getting that feeling in your comment. If you're comparing a 20 unit with a single family, what impact does that have on your buy box? Again, for most of you, that's Tamika. For most of you, you should not be doing that. I'm telling you what I've done. Probably started doing that after 10 years. In the beginning, your buy box is very focused. You will eventually get to the point where you're comparing all assets against all things. But in the beginning, the first 90 days, it's fourplexes, it's houses. It could be apartments, but if you're in my course and you're just starting out, you are not comparing houses and apartments. Too soon, too fast. Tamika, I know you've been doing this for a while. I know you've done several deals. What I would tell you is everything goes in the same spreadsheet, and I just take the highest yield. But again, your spreadsheet will be a buy box, right? I only buy in this city or this area or these things. But for, again, a lot of people just starting out, you are not doing that. And I don't want to mislead anybody if I've accidentally done that. You are only comparing houses with houses, fourplexes and fourplexes. Let's see what else. What helps you decipher your yields? Obviously, we want highest yield. I don't think there is any deciphering. It's math for me. And math means unemotional. After 90 days, you should be able to sort your spreadsheet very easily. You should be able to articulate, hey, average is 6. Then if you're following my method, you are only writing deals on 8s and above. These are all just examples. So, yeah. All right, let's see what else. What criteria did you use to choose Fresno? That's a very good question. I used population. There was a couple of markets in our search around where I live in Mountain View that produced okay returns, but they were too small. I wanted to have hundreds of thousands of people. When I started there were 500,000 people. Now 1 million people. All right, we will go back to chat in a minute. I want to bring on the stars. We will bring Nathan on first. Let me see if I can do this. Nathan asked to unmute. I think I did. Are you there, Nathan?
I am here.
Oh, look at this. It's like I almost know technology. It is scary. All right, let's see if I can bring up Nathan's buy box. Look at this. It's like it's actually working. It's crazy. Nathan, do you see that?
I do.
So Nathan, do me a favor, introduce yourself to the students, the followers here, who you are, where you're at, what you do. Then we'll talk about your buy box in the beginning, how it's evolved over time. But who is Nathan?
Sure. My name is Nathan, and I am married to Joanna, and we have been interested in real estate for many, many years. I didn't get red pilled until about a year and a half, maybe 2 years ago now. And my brother-in-law recommended Michael Zuber in the course probably a year and a half ago, plus or minus. Maybe it's been close to 2 years now. Anyways, when we first started, I thought, who's this Michael Zuber guy? He was not flashy at all. I don't know who I'm listening to, but the more I listened, the more I grew and learned and appreciated Michael mentored us, right? And he did it through his course and through the book and through his YouTube channel and all kinds of things. So that's our story. We're in San Diego, California. We have invested here in San Diego, in St. Louis, Missouri, and in Florida, little place called Seminole, Florida. So that's where we're at.
Very cool. So let's walk people through, like, when you were looking at St. Louis and the idea of a buy box came up. I mean, I have no idea how big St. Louis is. It's a major city. I'm sure it's huge. I mean, how do you figure out St. Louis from San Diego?
Yeah. So there's 1 million people in the county of St. Louis. I don't know how many are in the actual city of St. Louis. I don't buy in the city of St. Louis,
Okay.
but we were really looking to invest in real estate more seriously, and San Diego is very expensive.
Mhm.
And so I started looking at cheap markets, right? Detroit, Michigan. There was a couple of them. I started looking in Tennessee and in Texas. And the first thing that I realized when we started this process is, dang, this is a big country. Like it's hard to know. I mean, it's just, there's way more information than I could possibly process.
Yes.
And so we started to kind of narrow down some things. For example, some of the old school investors that I talked to, they said, never buy out of state. You'll never make any money. It'll be worthless. Your whole property is going to catch on fire and your world's going to fall apart. Don't buy anything you can't get to within 2 hours. And I said, okay, and kind of ignored them. But one of the things that I took from that was, I don't want to have to travel a full day to get to my place.
Okay.
So someone else I know invested in I think Tennessee, and it's a full 12-hour travel day to get there from here.
Right.
And I did not want to do that. So I thought, okay, St. Louis. First of all, I was born there. I have an aunt that lives there.
Awesome.
I have I can get there in a direct flight in 3 hours or less.
Okay.
And so it narrowed down on that area because of those reasons.
So you had roots. Direct flight was very helpful. Obviously, having to connect all these other smaller cities, especially with travel these days. I mean, missed connections and all that stuff. So, okay. So I like that. I like that criteria. And again, everybody should have theirs, right? Especially if you're going to go out of state. Like, I love the fact you had an aunt there, you have history. I mean, I feel really nervous for investors who get enamored with cheap because they heard of some city on Bigger Pockets and they've never been there and they have no intention of going there. I mean, like, scream red flags to me. So, okay, here is your St. Louis spreadsheet. Kind of highlight what are we all looking at here? Because again, you built this. Some of these look similar to what I have, but a lot of them are yours, right? What was important for you to have as you were building this out?
Well, I think the first thing that I realized was that there's a lot of zip codes in St. Louis. And so as I was doing this process, I realized I needed help. And so I started connecting with realtors and property managers and various other people who had invested there, and started to narrow down a few zip codes. The first place we bought, we 100% went for cheap. I was looking for the cheapest possible house I could get that would cash flow. And according to this spreadsheet, right?
Right.
So this is a little bit old. This is not what the original one looked like. Okay. And I can also do these numbers in my head a lot faster. I know, yeah, right. Like, I know this market pretty well, so I kind of have a pretty good idea of what things are going to be. But anyways, so there's like zip codes that are kind of all over the place. But I asked, when I finally settled on a property manager, I said, where are the zip codes that you will not manage in? And they gave me 5 or 6. Okay. And then I said, where are the zip codes that you wish you were dying to have more properties there? You want to build your business there. They're good tenants. You want more of those. And awesome. They gave me a list of 5 or 6 areas. Okay. And so that's how I started to do searches. And then I also realized through this process, I didn't want 2 1s. I want 3 2s with a basement, single family homes. They rent really well. They have got long-term tenants who take care of their homes. And so that's developed over the last 18 months to figure that out. But that is now my buy box within these 5 zip codes.
I love everything about that. I hope people got that. And if not, they will rewatch this because I'll post this in the group later today. Your buy boxes will change. So again, kind of tying parts of the course together. One of the things you do as you build your spreadsheet is you know what you don't know. So going to a property manager and asking those questions, I hope everybody wrote that down. Awesome. Absolutely. Right. Where do you want to go and where you like ignore? Yeah. I think that's great. I want to ask about basements, right? Basements are not something I have ever thought of. Why is a basement important? Is it because people store stuff there? Are you creating a secondary unit? What are we doing? Yeah, so I have never thought about basements before in my life. In fact, when I went, we bought our first 3 properties, and then I went there, and man, basements creep me out. I don't like it.
but that's a really normal thing back there, and it's an expected thing.
Okay.
But people turn them into bedrooms, so they can't legally be a bedroom because you need egress. Well, you could do it. It has to have egress, and there's all these little caveats for them. And there's some issues with water leakage, right? So I had to learn about all this stuff. But when it's done right, you could make a 3-2 or a 3-1. One bathroom houses are very common there. So you could turn a 3-1 into a 3-3 or a 4-3 really easily. It doesn't cost a lot of money to do that. And so I look for places like that, because also if you buy it as, let's say, a 3-2 and it's got a basement, I could rent it, and then years later, if I want to, I can add value and build equity by building out that basement without having to remodel the place or, buy another property, for example. So
I love that. These are things you get to uncover, right? That when you do the spreadsheet, and this is what I kind of talked about, like you build the spreadsheet, it's focused, you kind of get it, you're vibing with it. And then you start to uncover these aha moments. Like one of my aha moments was, oh my God, Zuber, you should buy 2-bedroom, 1 baths over 1,100 square feet. Why? Because usually it's a wall and a closet and you got a 3, right? Buy them as 2, rent them as 3, magic, right? These are all things that you get to uncover, and every market has their thing, their configurations. And again, from 2012 to like 2016, I think if I went back and look at what we bought, I would guess greater than 50% of them were 2s, and all of them are at least 3s. And I think a couple of them were 4s now because they had such funky layouts. I love it.
So just as an important note that this is the buy box for St. Louis, right? Like our buy box in San Diego is very different.
Of course, as it should be.
Someone just commented that these house prices are my down payments, and I'm like, I get you. I understand.
Yeah. Everybody's buy box is different. I didn't scroll to the right. It's not like we're hiding anything. So let me see if I can scroll over. Yep. So again, just all normal stuff. And again, for me, it's all about yield, right? That's my thing. Every asset's a bond, and bonds are priced on yields. So what is average in St. Louis these days?
If I get 10%, I'm pretty stoked.
Okay.
I think average is about 8 to 12%.
Okay.
And so a really good deal would be in the 15% range. That would be like an awesome deal, which I was able to create with our burr that we just did. So that was pretty cool. That's not on this list, but
that's okay.
It was pretty cool.
So as you are learning, kind of wrapping up your spreadsheet, what is this buy box, this exercise? First off, as you do it more, you'll be able to do these in your head, which is exactly where you should get to. So that's awesome. But as you were building this out, you and your wife, Joanna, were doing this together. Did this become what you would talk about? They would ask, you would communicate, and you would learn together?
Oh yeah. Yeah. In fact, one of the first exercises that we realized was we had a house. Before we started your course, we knew we wanted to invest in real estate, but we were just doing it like we buy a house, save up a down payment, move into our next house. And we did that 3 times. Well, then we do this course and realize that the second house we bought was an alligator.
Oh, oops.
It was costing us. And that was convicting. I mean, it was like instantly like, oh crap, we screwed up, right? I didn't think about this stuff. And so this exercise, one, helped us realize that. And then also we were able to raise rents and fix that. So it's not an alligator. We make great money on that, but I just didn't even know.
Right.
That's one thing. The second thing was this has become for a long time. We just had our 4th baby. So we've moved ourselves personally. So some things have slowed us down, but for a long time, this is all we talked about every night.
That's awesome.
Just what's the next deal? And people start bringing you deals all the time. The more and more you get involved in a market, people will say, hey, I got this opportunity. What do you think? And I'm able within 5 minutes to know whether it's a decent deal worth pursuing or not.
I want to wrap. I mean, that last little piece is important. Once you have a buy box and you're comfortable, tell everyone. Make it your, for some of you, make it your signature line. I buy 3-bedroom, 1 bath in St. Louis in these 5 zip codes that have basements or whatever it is. Because you just never know. Last year, last 2 years, all my deals came from my network. Now I hope to get some stuff out of the MLS. Any other kind of closing comments, Nathan?
I'm incredibly thankful to you and to this course and to this this Facebook group for the feedback and input. No other closing comments. I'm excited to continue growing with this community. It's great.
Awesome. Thanks for doing this, Nathan. Put you back on mute. See if I can do this right. Oh, look at that. And now we're going to Roldan. How you doing, buddy? Ask to unmute. There he is.
Hey, good morning, good afternoon, good evening, everybody.
I like that. I like that. All right, Roldan, get ready. I'm going to bring up your spreadsheet.
Yeah.
Roldan spreadsheet. Here we go. Look, it's technology is actually working. I love it. Roldan, can you see this?
Yes, I see all of it.
Awesome. So tell us about your buy. First off, introduce the audience to who you are, where you're at, what you do. Then we'll get into your buy box.
So I am a husband and I'm a father of two, 3 years old and a 2 months old baby, both boys. I've been investing since 2013. Pretty much started on my native Puerto Rico, where I've done some 1031 exchange and have now a 6-door multifamily, 1 condo and 1 single family home. And in 2019, started investing in Jacksonville, Florida.
Okay.
I came across your channel in the summer of 2019. I think you had only like about 4,500 followers at the time.
Long time.
So yeah, it's been a great evolution to witness that. But yeah, I started heavily investing pretty much in 2020 after getting more education and networking within the Northeast Florida, Jacksonville market. Right now I have 5 single families over there, but I've done a little bit of everything in these last 3 years, a little bit of wholesaling, flipping to keep us as holds. I've done a little bit of notes, selling notes of properties that I have acquired pretty much directly from homeowners. Last thing I did, new construction. I did 3 projects.
Oh, wow.
And pretty much kept 1 out of the profits of the other 2 single families that we sold. So 2021, 2020 were very productive. A lot of people were cautious because of COVID. I guess I leveraged that opportunity and took a little bit more of risk, but with the background of investing, education, and really this spreadsheet and all the economy information you put out on a daily basis helped me and my wife to be confident making sound decisions that give us an excellent return. So
that's awesome. So do me, so help let's try to speak to the new investors. Maybe they got the course recently, a couple months. They're trying to figure out their buy box. You don't live in Jacksonville, right?
No, I'm stationed right now in Norfolk, Virginia.
So why Jacksonville? Because again, that's a question. Why Jacksonville? Did you have relationships, history? Did you want to live there? Why Jacksonville?
Yeah, so at the time in 2019 through 2021, I was stationed in Jacksonville.
Got it.
That had been my 3rd time stationed in Northeast Florida, which I know the market, right? Give me some background about that market. Already had few friends.
Right.
Is the place that we foresee kind of like settling once I am retired from active duty. It's relatively close to Puerto Rico, where all my family is. But the quality of life is better. So we have decided to continue growing our rental portfolio primarily in Florida.
Yeah, I like it. I mean, those are the decisions all investors should make, right? Again, live where you want, invest where it makes sense. If you have history, relationships, it makes it easier. If you want to eventually retire there, it makes perfect sense. So it makes perfect sense for you and your family. Why Jacksonville? So now you have. Go ahead.
No, and other thing is like Florida, pretty much everything is hot, right? It's a very difficult market. I have not been able to acquire anything through this methodology for about 10 months right now. I still do it daily, but it's very difficult. So now the decision, right? Because my wife asked me the same thing. Why here? And I said, well, there's like 5 different type of employment sources here. So
Right.
it's not only military oriented, but there's a lot of, Forbes companies that there's a lot of blue collars workers. So I know I would have a good pool of tenants that are not necessarily rely on government assistance to pay the rent.
Got it. So when you started building out your buy box or your spreadsheet here, what were kind of the important variables that you were adding? Again, you square footage and beds and baths and age. Because again, I don't invest in Florida and nothing about it, but I do know you guys get hurricanes, right? Was that, those, is there like, do you look at roof composites? I mean, I have no idea, right?
Actually, yes, roof is one of those criteria that actually roof is a hot topic right now because house insurance have triple and double.
Really? Oh, wow.
Yes, in the last 2 years is eating a lot of my yield.
Yeah.
So flat roof are pretty much a no-go for me.
That's what you should learn, right? What to focus on, what not to. If flat roofs are impossible to get insurance,
and I know a roof that is 12 years old or more, pretty much is going to have a very high premium.
Yep.
And very likely a replacement shortly after buying it.
Yeah.
Because of insurance companies. And is anyone who want to start exploring Jacksonville or anywhere in Florida, do a little bit of research about house insurance, not only for investors but for homeowners. Is an uphill battle right now in Tallahassee. But other things like termites in Florida. So for me, I prefer brick and concrete blocks, buildings.
There you go.
Just because the likelihood of having termites is way less. I do WDO inspections on all the properties I present offers, wood damage organisms inspections. But I stay away from the beaches just because flooding is another thing.
Sure.
And St. John's River. So Florida has either issues with flooding or issues with sinkholes. So things to be aware. I stay away from bodies of water.
Yeah. Well, it's funny. I've been doing this a long time. People often think about stuff burning down. I can tell you water is far more damaging than fire.
Yes.
Yeah, water gets everywhere, and water actually crawls up the walls. It's a crazy thing, up the drywall. So the buy box, it seems it helps you kind of focus. Yeah.
Oh, a lot. And I continue doing it because it gives me, now that I'm far away from the state, it gives me a good understanding of what's happening in the market regularly, right?
Yeah.
Like Nathan mentioned, pretty much within 5-6 minutes, I could tell something through the MLS if it makes sense to look any further. But also, so this spreadsheet for everyone out there kind of like goes along with me looking at Trulia, Redfin, Realtor.com, and whatever is your choice, because I mark those as favorites, right? So they're already sort of on my profiles. And I can do I get alerts, either they go pending or they go back to the market, and I allow to go back to this spreadsheet quickly and understand what is the property about. But it helped me understand upfront if I can present an offer, or I talk to my agents, what do they need to speak on my behalf, how they can convey why my offer is not of what they're asking, but what other things I can present as convincing that it will perform. As you can see here on my spreadsheet, like line 5 and line 6, these are the same properties, but first I put them all together, and once a week I sit down and I look into what do I need to change in these numbers to make the yield work for me.
That is where I want people to get to with this spreadsheet. Like
Yeah.
you've heard me talk about in the daily financial news, or maybe some of my interviews, we're only writing great deals today.
Mhm.
So let's just take this line 5 and 6, 1971 Swallow Run.
Mhm.
Let's just say, so in case people don't know what we're talking about, it's these two rows.
Yes.
And let's just say average for your market is 7, right? So that's
Right.
line 1. Okay, great. Listing comes on. It's fairly priced. Ho hum, no big deal. But you want it to be a 10% yield, right?
Right.
So what you're going to do is you're going to take this listing, which came out at, I don't know what it was. Where is it?
Towards the end.
Yeah, 125 grand.
Mhm.
And you're going to say, what do I offer to make it a 10? Well, in this
Mhm.
case, you offered $15,000 less.
Mhm.
The repair money is down. I don't know if that means you got a credit or whatnot, because it's 25 versus 30.
Right.
Your closing cost is a little bit less because, again, you're paying less, which makes sense.
Right.
Your payment's down because you're paying less. What else? Anything else change? Everything else should stay the same. Okay.
Right. And how do I come up with these numbers? Well, because I've done various transactions.
Yep.
I have a good understanding of the titles company's cost,
Mhm.
closing cost. So I have all my formulas built within.
Yep.
And instead of changing boxes one at a time, I might just need to tweak a little bit of the percentage within the formula to get
Sure.
my numbers. But
Mhm.
you can see here, both are renting for the same, for
Yep.
1,400.
Exactly.
So I'm not changing because I want to be competitive with my rents. So
Mhm.
if the average rent is 1450, I'm sorry, 1450, I self-manage. I am
Mhm.
okay offering 1,400. I will
Mhm.
still have a quality tenant,
Mhm.
hopefully with low turnover,
Mhm.
but getting the yield that I desire, which for me is
Yeah.
8%
Okay.
uh,
That's
or
awesome.
greater.
There you go. So one of the things I want to tell the new folks looking at this is one column that's not on my spreadsheet, but given we're in a changing market, I would probably add it's days on market.
Mhm.
The reason I would start adding days on market to my spreadsheet is because for the last 2 years, the only winner was speed. So for me, 2 years, days on market didn't matter. I was either first or I lost. What is coming and what I keep talking about every day is I am no longer looking at first day listings. I don't care, but I'm going to put in a number. I'm going to say 15, right? Then I will start only looking at 15 days. And the reason that is important is because that is a sign that there might be motivation. I can also promise you, I will not be writing any offers at list price. If you're going to look at first day listings, you're at list or above. If you are here, you can go in and write lower, right? You're going to have to wait. Is it 15 days? Is it 10 days? Is it 25 days? No idea. But again, these are things for you to think about. So I think days on market is something that I would definitely start to think about, in my opinion. What do you think?
So, no, definitely. This property particularly has only 3 days on the market, but I've been monitoring this house for over 2 years.
Oh,
And,
wow.
I'm working some mail campaigns with it. That's what on my comments, I make observations how the price have changed. They've been trying to sell this house since 2020. And for some
Seriously,
reason,
it's been listed
yeah,
since 2020.
on and off, on and off. I think it's a absentee owner who has it rented and perhaps is getting tired of
Yeah,
being a landlord.
I would think.
So on my new mail campaign, I'm gonna pretty much suggest how to minimize their capital gains, because it's advertised also as is interested on doing a 1031 exchange, the way it's listed. So that gives me a cue that it's trying to avoid capital gains.
Probably.
So this perhaps is a good candidate for seller financing. And those are things that I like to make those comments on my spreadsheet. So
Sure.
I have so much on my brain, right?
Yeah.
I can only retain.
Yeah, I think that's important. There's a couple of things that I would do with these spreadsheets. So again, if I was doing this today, I would have days on market. I don't have it on my base spreadsheet. The market changed. Days on market are now important. I fundamentally do different things based on days on market. Everybody has their buy box area. Pick your time frame. For me in my market, it's 15 days. In 4 months, it might be 30 days, right? The market is changing really fast today. So I would add that. The other thing I think new investors need to do is you definitely need a comment section. Both Nathan and Roldan had that. Put in comments, put in your thoughts, right? Everything, it's your spreadsheet, folks. Make it yours. If you want to put in a long worded comment that's 100 words, it's yours. You're not getting graded on this. It is yours, and it will evolve over time. But I think the real power in the spreadsheet, not only is learning average, but when you can go into a deal that's listed, recalculate it to get your preferred return, write that offer, that's when you've unlocked the magic of everything one rental at a time. Take a listing at 7, write it at 10. You got it. It's yours. You've taken
Michael,
everything I have.
If I have the opportunity to share a couple of more insights,
please.
There are states that are non-disclosures, which California is a non-disclosure state. Florida is a disclosure state, and states like I know Georgia, Alabama. Those are states that pretty much all documentation is public.
Okay.
So by a simple Google of your county appraiser or your tax collector, you can find a lot of good insight that will help your real estate agent to convey your case. Those are my last 2 columns on this spreadsheet. Right? And those hyperlinks, yeah, it takes a little bit more of time, but with practice, you become more proficient, and they give me primary sources of information. They give me history of who the deed is being under and for how long. What was the last price this property was sold? Is maybe on their estate or on their trust. And also the actual taxes, the Zulu column, the next one, the tax appraiser tells me actually how much taxes these owners are paying. Why? Because if it's homestead exempt, taxes are going to be much lower than the investor.
Yes.
So I want to take those things in consideration and throw those perhaps conservative numbers on my spreadsheet.
Let's talk about that, because I don't think a lot of people caught that. This is in Texas too, I think, right? If you're a homeowner, you have one set of taxes, property taxes, but if you're an investor, you have another set. So if you're doing a cost structure based on existing taxes, but it's owner occupied taxes, you could get smashed.
Yes.
As an investor.
Florida is very similar.
Okay. All right. Wow. That's a good catch.
Yeah. So just by putting those links there as a quick reference, I help my real estate agents to speak the case on my behalf. 2022 has been very difficult, but I think with persistence and keeping the same type of style, presenting our offers, I'll be very close to by the end of the year unlock at least one more property.
Yeah, Florida, as I've said a couple of times in my daily shows, it seems like everybody's moving to Florida. You got a lot of population coming, so it is probably the toughest state today, I would think. Yeah. Any other closing thoughts on your spreadsheet?
It needs to be daily.
Yes, it does. Yes.
I would say, even if it's just to enter 2 or 3 houses, just it helps to understand what is happening in your market of interest. It gives a lot of insight.
Yeah. And then Roldan, you sent me your actual buy box in words, right? You sent me that earlier?
Yes.
Right, so
should be on the email.
It did. I just put it in a Word doc because it was just easier for me to share. And I have Dion's here as well, which we'll get to in a minute. So this is your buy box, right? Do you see that here?
My criteria. Correct.
So tell people why, like you want concrete blocks and bricks because you don't want termites, right?
I minimize the exposure.
Yeah, minimize. Yeah, you still have it in the roofs and whatnot. Okay. You have
for hurricanes.
Oh, hurricanes. Yeah. So square footage, right? You don't want too small or too big,
right?
I'm guessing.
Correct. And the plus minus 250 square feet. Carport is very important. Houses without carport They don't rent well.
Yeah.
So
Okay. And then years, you have your age. And again, I'm guessing this is what you send to your agents as you, hey, I'm Roldan. Nice to meet you. Here's my buy box, right? You just cut and
right.
paste this.
My elevator pitch pretty
Your
much
elevator
everywhere I
pitch.
go.
Yeah.
Yes, sir.
Again, I would make this as your signature. Part of your job in the course is to meet 2 people a week. I would use something like this, right? Create your own version. Yeah.
And there's many wholesalers. They ask you, what is your criteria? So I send them this. I'm highly interested on 3.2, but I might consider 2.2 or even a through on 1.5. If not, don't waste your time.
Yeah, exactly. Yeah.
Yeah.
Yeah, this is about, and again, the beauty of a buy box is, again, you tell people what you want, but you also tell them what you don't want. Right. So it helps everyone. And then you go top of mind when you actually take action when something's in a buy box.
If I'm not interested on flat roofs, I don't want anything next to a main road or a highway. I mean, I don't. Any alterations or something without a permit, I am not the one who's gonna try to figure out how to get the permit.
Yeah.
Yeah.
Very cool. Well, Roldan, thank you very much for that.
You're welcome.
Let's go on mute and let's see if we can't get the man, myth, the legend, Dion here, because he sent us his buy box as well. You there, Dion?
Howdy.
All right. So let's see if technology keeps working. So far, I'm excited. It's all working. Hopefully you can see that. And this is what you sent me earlier today. You remember, see this?
So this is an email basically that you send to an agent when I meet them, or somebody that I know in real estate, a flipper or a wholesaler.
So what is really at the heart of this? You're basically saying this is what I buy and what I don't buy, or what is this to you? And this,
right. The first thing is to point out what I don't buy.
Yep.
Because I try to have a broad criteria that I send to the agents so that I could filter it down, so that they're not filtering out deals I might want. So since it's so broad, I want to get rid of things like HOAs, foreclosure, short sales. I don't want to do any negotiating with a bank that can tie up money for the next year, 18 months. I want a deal where I can close in the shortest amount of time based on lending.
And then you tell your agents you want 2 buy boxes. Again, a new investor is going to have 1, but you've been doing this a while in your market. Tell us about the multiverse BRRRR.
Right. So the multifamily is the one I tend to go for because it requires, I go rent ready or already occupied, takes no energy, wait 2 months, use the binder strategy. I have a BRRRR search set up because as I'm saving a down payment, I keep thinking I have the money to do my own BRRRR without using hard money. So I might as well be searching for it. But every time that amount of money builds up, I end up finding a small multifamily. So I haven't done the BRRRR yet.
Yeah. But again, you're also looking for 4 units, right? You want to do residential financing, not commercial. Fair?
Correct. Right. And so this might adjust now that we've got the DSCR loans that are going up to 8 units. So that's something to think of going forward. But my auto searches that I want set up right now, this is what I'm putting out. And the counties I search in and the county I don't want any info from.
I am not interested in King County, even if it's free. I think that's a pretty clear statement. Don't send me anything in King County. I love that. That's funny. I have no idea where King County is, but I still think that's funny.
Seattle.
Yeah, that's funny. You invest for yield, not curb appeal. Ooh, I like that. Cash flow, step 1, right? Yield. It's all about yield for me. So, yeah.
Right. The thing that I don't want is an agent's interpretation of what they think I want.
Yeah.
And it's usually
pretty.
This will rent fast, or this is the right square footage. And I'm in your ballpark with square footage. I've never met a tenant in my life ever who's known what square footage was, or how it related to it. So,
Any other thoughts on how would you talk about buy box more and what it means to you? I'm going to go look through the chats.
Sure. So the big thing with this is how I'm communicating with people who are going to send me deals on social media or at your work or however you interact with people. I would also have a buy box where you tell people the basic criteria of what you want, and that you will give them however much money it's worth for you to get a deal. I say, I will give you $1,000 if you send me something that sounds like this, where I want to invest, and I close on it. When I close on it, I'm going to send you $1,000 because you never know where leads are going to come from.
Yeah. All right. Very, very cool. Thank you very much, Dion. We're going to try to wrap this up by going through all the comments very quickly. Thanks, Nathan, Roldan, Dion, for your real life examples, giving back to the audience. I appreciate you. Thank you, thank you, thank you. So should you cap your buy box on price 3.2 up to 400K? I don't have a cap in my buy box. I buy what the greatest deal is. For me, it's not price, it's yield. If you can get a great yield on a $1 million property for whatever reason, go crazy. I would argue that in most markets, buy boxes naturally have a cap, but I don't think I have a cap on any of my searches. Yeah, I don't think I have a cap on any of them, but I think naturally most buy boxes will have a cap, but I don't know that I would put one in. How big should a buy box be? How many properties should a buy box be? In the beginning, when you're learning the skill that I'm teaching, it's 20 to 40. When you get to Roldan's and Nathan and Dion and my level, it doesn't matter. In the beginning, it's about 20 minutes a day, repetition, constantly updating. So that question has kind of two answers. Can you expand a buy box for owner occupant scenario? Absolutely. This is something I've been playing with as the market changes. For owner occupants, it's probably not yield unless you're going to rent bedrooms like Spencer or or Todd Baldwin, other experts on my channel, but I think most owner occupants don't. For you, it's probably, I don't know what it would be. School districts, the criteria is different. It's probably not yield, but there probably is some kind of mathematical formula that produces a score. So the logic is there. I just haven't worked out the math yet, but I think there's something there. What factors go into making appropriate buy box changes while navigating a horizontal or declining and recessionary economy? Well, again, for me, the biggest thing to watch is going to be days on market. I think days on market is going to be the leading indicator for real estate slowing down. That's why I have been very clear, and I tell everybody what I'm doing. I've gone from looking at first day listings only to 15 days or greater. I want anything that's perfect clean not to hit my radar. I don't want to waste my time. But in my market, 15 days seems to be about where price drops may occur. So that's going to be the thing. I think we are heading into a recession, as everybody's heard me say. I think there are going to be better deals, and I want to find my motivated seller. For me, that starts at 15 days. To get 20 to 30 listings in my area for multifamily properties, I would have to look at a very large area. Should I be developing my skills and learn markets using single family properties? What do you suggest? That's a great question. I don't know what you mean by large area. If it's like a 60-minute drive to everything, but you only want to do multifamily, I say stay with multifamily. But if you're talking a 4-hour drive to see stuff, that's a long day. But I would suspect in most areas, if you could get to like the farthest corners within 60 minutes, and you only want to ever buy multifamily, I would probably stay with multifamily. But if it's a 4-hour day, then you probably learn the skill with houses. So hopefully that answers that question. What if my buy box has all properties with negative yields? Well, again, Jeremy, it depends where you are in this. In the beginning, if you're trying to learn the skill, whatever the yields are is not the problem. You're trying to learn the skill. If you can get to the point where, again, I'm going to pick on San Diego because I did earlier, and you can come back and say, Michael, after doing this for 90 days, the average yield in San Diego is a -3. Well, great. You've learned the skill. Now go where you want, because a -3, in case anybody doesn't know, is an alligator, and you don't do alligators in my course. But again, if you looked at San Diego for 7 days and you're like, I can't find anything, well, you haven't done it enough. So don't try to shortcut it. So it depends on how long you've been looking, Jeremy. Can your buy box include both multifamily and single family? I would tell the new buyer, no. If you're in your first 90 days, no, it is too hard. The expense structure is different. The tenant base is different. The turnover is different. Do one or the other in the beginning. When you get to like a year or 9 months, it won't matter. Do what makes sense for you. But in the beginning, the first 90 days, I would argue do one or the other. I would think single family, just given quantity, is better because there's more of them. But as the question said earlier, if you only ever want to buy units, then do units. Hopefully that makes sense. What if your buy box area has properties with negative yield? Same question. I think it's actually the same person, so I answered it earlier. Should we keep in mind the pool potential tenants before choosing the buy box? I mean, I guess you can if you want. I never did. For me, it's yield, but I guess, I don't know. Yeah, I mean, if that's important, yeah, I don't know. I've never thought about it that way, but I guess it makes sense. I never thought about it that way. What size of population market would you recommend investing in? Again, I'm a very conservative investor. I want hundreds of thousands. I just interviewed somebody on Thursday, I think, that invests in a town with 20,000 people. That is way too small for me, but they're making a killing. So again, my opinion shouldn't matter. I am not going to invest in an area that's less than 100,000, but you can make it work lower than that. I won't, but you can. Sharon, do you want both single family and multifamily, the same buy box, because the buy box is supposed to be more specific? Yeah, you do. Well, in the beginning, it's about learning yield. And in the beginning, most new investors will assume the expense structure is the same in a multifamily and a house. And I can promise you they're not. I own them both. Like, for example, you may estimate that utilities is the same in a house and a multifamily. They are not. In a multifamily, you may have responsibility for snow if you are in a snow place, and you won't in a house. You may owe water in a multifamily and not in a house. The expense structure is just very different. You want less confusion. You want less unknowns in the first 90 days, in my opinion. Should you consider all terms to be on the table, rate, price, seller, carry, et cetera, in an expensive market during negotiations? I do. Yes. Will mastering your buy box analysis help you with market acquisitions? I think it's everything. I think it's everything. I think understanding your buy box is the only way to do it. Otherwise, you're gambling. Just wanted to clarify you since you used as your personal example. Cool. Awesome. Awesome. Yep. Even if you manage yourself, those house prices and my down payment, that's funny. Yep. Cash on cash, return on capital. I call it yield. Yes. Do you source the data for population? You can use the Census Bureau. You can use a local paper. You don't have to be, I mean, does it matter if it's 92,503 or 101,000? No, I just don't want small. Citydata.com. Look at you guys giving back to everybody. Yeah, Census Bureau is a good one. We got to 100 people. I wasn't watching. That's cool. You guys are awesome. Look at everybody helping everybody. Just want to make sure I get everything. We're running down. Oh, sorry. Zoom in, zoom out. Sorry. Didn't know that. Didn't realize. Yeah, most of this stuff that people are putting in is from Realtor, Trulia, or Zillow. Absolutely. Some folks are getting data from agents, but most of it is online resources. Can you describe your calculation of yield? Yeah, it's very simple. The denominator is out-of-pocket money. Down payment, closing costs, make ready. Numerator is yearly cash flow. Rent minus all expenses times 12. Very simple. And then you times it by you turn it into a percentage. Oh, look at that. Chester's answering. You guys are awesome. I just got to scroll down. You're answering all the questions. Out of state. Yeah. South Carolina, like another state that has, you got to watch those taxes. Can the buy box criteria be made available? I don't know what that means. I don't know what that means. Your buy box needs to be something that is to you in your area. It could be as specific or as open as you want. In the beginning, it's 20 to 40 active listings. And again, the first 90 days, you are learning a skill. It is not about doing a deal. It's about learning a skill. How do you know it's time to change versus sticking with it? What indicators? So again, the first 90 days, it's all about getting to average. Can you have an intelligent conversation with anybody about what an average deal is in your market? Once you have done that, you get the graduation sticker. You've graduated. Now it is up to you. Question 1, are you happy with the yield? That's question 1. If you're in a market, and I'll just again pick on San Diego, and the average yield is -3, you're probably not happy with that. Then you go, not happy. Then it's, where do I have friends? Where do I have family? Where do I have a head start? Where can I drive to? Where can I fly to? But do not overcomplicate the process in the beginning. In the beginning, it's about learning the skill. And the only question that ultimately matters is what is average. Hopefully that makes sense. Any more questions? This has been fun. We will have to do this again. I had no idea how this was going to work out, and this greatly exceeded my expectations. I want to thank Nathan, Roldan, and Dion for being good sports and helping out. All right. I think we're going to call it here. Again, folks, remember, I'm going to post this. This was awesome. This will take a while to render. This will be in the bonus section of the course. And I'm going to ask Roldan, Nathan, and Dion if I can actually publish this on YouTube. We might as well give it out to everybody because I think buy box is everything. All right. So we got Roldan with thumbs up, Dion thumbs up. I will reach out to Nathan separately. All right, everybody. Take care of yourself. Have a wonderful day. This was so much fun. Thank you for being here. You guys are awesome. Bye.